of. So then you have to tell them, okay, it's not any of those. Venezuela's in the top 5. Really? Venezuela? We get crude oil from Venezuela? Yeah, we do, honestly. They're up there in the top 3 or 4. Now you've really confused them, and you tell them Mexico's up there, and they say, wow, really? I didn't know that. Then you tell them, and I would then say now, who is the United States' largest supplier of crude oil from outside the United States? And honest to God, one time I had somebody say Alaska, which tells you all you need to know about Americans' capabilities on geography. But still, you can't find, even today, that 1 out of 100 Americans will know that Canada is our largest supplier of crude oil. It is shocking. Please, go out and promote yourself and let them know that you crazy Canadians are the ones who sell us all of the crude oil. Americans don't know that. It's shocking, but it's true. They just don't.
It's always a possibility the LNG decision could be made by somebody from Harvard. So that,
there's got to be a joke in there somewhere, but I fail to find it.
Crude prices are back to where we were in 2004, yet actual volatility in the market's expectation of volatility over the rest of the year is more than twice the volatility experienced back in 2004. Do you agree with the market's assessment of very high crude volatility through the rest of this year?
I hope not. I hate volatility. I make my living trading, and I just absolutely hate volatility. I hope it dies and goes down to zero, but you know, I can't argue with what the market's assessment is. If it thinks that volatility is going to remain at reasonably high levels, I, as a trader, have to understand that that's where it's at, and I won't argue with it. But I hope it's wrong. I hate volatility.
What does that tell you when crude prices are the same as they were in 2004? To me, it tells me, whoa, 2004, the world economy was growing at 4%. 2009 is maybe the deepest post-war recession. Why isn't oil at $10 a barrel? That would be my question. You know, people are saying, oh, well, you know, it's not that different. It's only maybe half of what it was in the last recession. Yeah, but this recession is 3 to 4 times as deep as the last recession. And I think that's the real issue with volatility. I mean, people know, and people have great doubts about what's going on in Washington right now and the ability of the economy to turn around. And there's great uncertainty about whether the stimulus package will get traction. And of course, the great boogeyman out there is Japan, 1990s. And are we going that route? But at the same point, I think the reason there is such volatility is some folk are stepping back and going, this is the deepest recession ever, or at least in the entire post-war period. Industrial production has fallen off a cliff. Non-farm payrolls are falling off a cliff at a rate that we haven't seen since the 57 recession, and yet oil prices are still $40 a barrel. What does that say? And I think that's the essence of volatility. Is the glass half empty, or is the glass half full? On the demand side, the glass is all empty because this is a devastating recession. Yet why is oil not $10? Why is oil $40? Because, as Murray knows, it ain't going to flow.
And there are a number of...
He's really good, isn't he? He's really good.
There are a number of questions along this line. What's in your personal account, Jeff?
I'll tell you what I don't have any, and I'll tell you what I think is the worst trade out there. Government bonds. Government bonds. That's right. The sanctuary that most people are fleeing to. Never have been what you'd call a monetarist. But when money supply starts to grow at 40%, it's hard not to notice. And let me tell you something. When you have a budget deficit of 11% of GDP, you got to notice. And let's just put that in Canadian terms, okay? In Canada, boy, have the goalposts moved. The same opposition that was threatening to vote down the minority government if it ran a deficit, now threaten them to vote them out if the deficit's not big enough. But what kind of deficit did they run? They ran $30 billion deficit. Well, you know what? To scale that to the U.S., what the U.S. are doing, and most of that was done even before Obama stepped in the White House, you'd be talking at 11%, you'd be talking about a $150 billion deficit. In fact, steel notwithstanding, the trickle-up stimulus from the Obama package is going to be bigger in Canada than Ottawa's package. But what has happened to the U.S. every time they've ran deficits half of the size? They've monetized them. By monetizing, it just means you print more money. And as the investor, this is what happens to you. The 10-year bond, of course, matures at par. But unfortunately, the inflation that has come about as a result of the monetization basically eats 30 to 40% of your return, like happened over the inflation that came about through the monetization of the Korean War deficits, the Vietnam War deficits that were half of this size. The only difference is back then, 10% of the U.S. federal debt was owned abroad. So if you're going to screw somebody, you're basically screwing your own taxpayers. Today, 50% of the debt's owned abroad. Why default on your own taxpayers when you can default on someone else's? And this is the way that you default on someone else's. Again, the Treasury bond matures at par. But if you're the People's Republic of China buying them at yuan, that's not your risk. Your risk is what's the yuan US dollar exchange rate when the bond matures? Let me give you a little flashback from the past. 1971 to 1980. What happened to the US dollar against the yen? The US dollar fell 40% against the yen. How do you think that went over in the Japanese Postal Savings Office when they cashed in their 10-year Treasury bonds? So I'll tell you what I think is the great head fake out there. We're not going sushi. We're not going Tokyo. We're going Argentina. That's where these kinds of money supply growth and fiscal deficits lead.
That's just wrong.
That is where we're going.
It's just wrong.
And the place that you've got to avoid at all costs is the bond market. Deflation may be the market chatter on CNBC, or maybe the Gartman letter. However, look in history at every time the U.S. has monetized their deficits, and you'll find that inflation, not deflation, is the dancing partner to those policies.
I am a monetarist, and I do look at the monetary statistics, and I am amused at times at all we hear now is the enormous nature of the increase of the footings of the Federal Reserve Bank and what they have done. First of all, I'm going to tell you that I laud the Federal Reserve Bank for what they have done, looking at the banking system in October and November of last year and fearing that it was this close to seizing up and saying that what we need to do, we have no choice, is to just absolutely throw with as violent a move as we can liquidity into the system, because if we don't, if this thing seizes up, once you lose trust in it, you got a problem. So they did, I think, exactly the right thing. The question that the inflationists are arguing now is that these are idiots at the helm of the Federal Reserve, and that they are going these reserves that have been put into the system shall never be taken back out. How short is their memory? The Fed acted exactly in the right manner after 9/11 and force-fed reserves into the system at a preposterous pace. And after the banking system survived 9/11, it took them back out. It did. Now, the same people who tell me now that inflation is going to rage violently because of the reserves put in the system, and I make no bones about it, this reserve injection is manifestly more than what was put into the system after 9/11. But to think that they are idiots, that they don't know what has been done, and that they are simply going to allow those reserves